All right, everyone, so we're going to talk about gold in this video. Why the commodities break into record highs at this moment in time. And it's all down to interest rate cut bets by the US central bank. You can see it here on Bloomberg. I'm going to be teaching you in this video a strategy that will transform your trading if you're investing in a precious metal. It's understanding how government bond yields, the interest rate on government bonds, is always directing the price of gold, because investors are only buying gold when they can't hedge inflation from government bonds. Okay, once you learn this strategy, it will transform your trading. I've been teaching this to thousands of my members, and every single one of them has been like, wow, this is mind blown. So come over to the computer screen, I'll show you what we're doing. If it adds some value, please like, comment and subscribe, and hopefully guys, I'll trade with you in my VIP channels. All right, everyone, so we're going to look at gold in the markets, and we're going to be looking at why the 10-year government bond is the #1 reason why gold goes up or down, because the 10-year interest rate on a government bond is being directed by the expectations of where interest rates are going. And what you need to understand when we're looking at the gold price is investors only buy gold to protect them from inflation if they can't buy government bonds. Okay, now that basically means, is that interest rate on the government bond going higher or lower? And I'm going to show you through history how the interest rate on government bonds is dictating the price of gold. Okay, so let's go back to 2018, where we can see the interest rate on a government bond was 3.22%. Now look on the left hand side, the price of gold was $1,200 an ounce. Look what happens immediately when the interest rate on a 10-year government bond goes down from 3.2% all the way down to 0.5%. Gold's price shoots up aggressively by over 70%. Notice how the peak in gold is when you get a trough, the bottom of the bond market. Now just think about this logically. If you're an investor and you don't want to gamble in stocks, you don't want to gamble in crypto, you don't want to gamble in currencies, forex trading, you can buy a government bond, which is the safest security in the world. You're guaranteed to get your money back plus interest. Now, as the interest rate on a 10-year government bond adjusted for inflation goes down, think about it. If inflation's at 2% and you're getting 3.2%, well, cool, your money's growing at 1.2% because the interest rate on a government bond is 1.2% above inflation. Now, what happens though when the interest rate in a 10-year government bond goes down to 0.5%? If inflation's at 2%, your money's losing 1.5% of its value. That is why during the time when interest rates go lower, you see investors go into the safest haven that's been around for thousands of years, gold, which is also seen as a precious metal equivalent to money, physical fiat currency. That's why you see the big appreciation in gold. Then notice, guys, the moment after COVID happened, we saw the 10-year government bond yield going up because inflation started to come all around the world. As you know, when the lockdowns happened, there was a huge supply of money being produced by governments. People come out of lockdown spending money, but the amount of goods being produced couldn't meet demand. And you know, we had a huge inflationary problem after COVID. Okay, look what happened. You see the government bond yields now starting to rise as investors are pricing in an expected raising interest rates at some point because inflation started to rapidly come into the markets. Look what happens to gold's price immediately. As the 10-year government bond goes higher, gold's price goes lower. Notice that, guys. Okay? So as investors can get more interest in government bonds, gold's price declines. All right? And then you see a period here where gold's price goes up again right here. During this period here, well, notice why, because the interest rate on government bonds stop going higher and they kind of just go lower during this period here. So the interest paid goes down, giving gold the room to move higher. Okay, so we get another leg higher in gold. Then notice what happened. The Federal Reserve, obviously with global central banks, started to raise interest rates aggressively in March 2022. Here we go. The first rate hike happened on March the 16th. And then the Fed went with aggressive rate hikes, okay, all the way into 2023. Look what happened the moment the Fed started raising interest rates. The 10-year government interest rate, the 10-year government bond started to also go higher because the interest rate on the 10-year government bond is always following the central bank's interbank rate. Okay, look, the 10-year government bond jumps up from 1.7 to 4.3. Gold's price tumbles at exactly the same time. So why is gold's price going down? Think about it. If you're an investor, you can now get more interest to protect you from inflation when you're buying government bonds. There's less demand for gold. So you see, As the 10-year government bond spikes up, gold's price declines. And then you see the 10-year government bond peak and then start to go down during this period here. And back in 2023, the markets were predicting rate cuts by the Fed. They didn't cut rates. They got it wrong. And look what happened. When the 10-year government bond yield starts to decline here, no surprise, you want to hedge the lower interest rates on government bonds by buying gold. So gold goes up 30%. Can you see the correlation? And then we had a period of time here where the markets realized the Fed wasn't going to cut rates, and we see another spike higher in bond yields. No surprise, guys. Gold's price goes down straight away. And then this year, the market started to price in rate cuts again, and we saw a drop in the bond yields, and then we saw gold's price spike up at exactly the same time. Now, there's been a small disconnect recently, but you know what happened. We had the war in Ukraine. Sorry, not the war in Ukraine. We had Hamas fighting Israel. There was quite a lot of risk of war. And when there is a risk of war, gold's price does go up. So we had this safe haven demand come into gold's price, which is why there's a small disconnect here. When as the bond yields went back up higher, gold's price also went up in value. Okay, so if you can understand now exactly the reason why gold goes up or down, basically, if investors can't buy government bonds to protect them from inflation, they buy gold. And when they can buy government bonds to protect them from inflation, they sell gold. You've seen the correlation between the two. So for you to understand where the 10-year government bond interest rates are going, you need to know where central bank interest rates are going, because they follow each other. So at the moment, the markets are currently pricing in rate cuts by the Federal Reserve in September, December, April, and July. So this is a spreadsheet that we use to know at every single meeting where the central bank's interest rate is expected to go. Okay, and then you're going to start to understand why this is being priced in to the bond market. All right, without this spreadsheet, you're really going to find it difficult to know where the bond market is going in order to trade gold, because you don't really understand why gold is moving. It's always moving based on where interest rates are expected to go. Okay, and at this moment in time, they're expected to go lower because inflation in the US is falling. So we look at current inflation, core inflation, and obviously the Fed looks at PCE inflation. But more importantly, we can see where inflation expectations are. They're anchored around 2%. Look, on a 2-year expectation, 5-year, 10-year expectations of inflation are around 2%. That is key, because the markets are always looking at where they predict inflation to go to know where the central bank's interest rates are going. This is why the markets are predicting rate cuts by the Federal Reserve. So now you know how to trade gold. Simple strategy, but very important. So many people just don't understand this, and they're trying to trade gold on technical analysis. They don't even fucking understand the fundamentals driving the price. If you understand the fundamentals, you can trade your technicals all day, and you'll be a lot more profitable when you're trading the gold price. Okay, so what if you guys want to do is, if you want to get your hands on this spreadsheet and you want to have data to this, well, look, inside my VIP channels, I got 500 members that are looking at these spreadsheet updates every day, and they're using this to get into trades in the markets. And you can see here, I update the members every day on where interest rates are going. Okay, I also share with my members all the trades that I'm personally getting into. Okay, and look, if I show you some of the results, you can see for yourself, members are really killing it. We had this member yesterday sending me some trades. I sent some Bitcoin positions to the members, £2,000 profit. We've had other members like Blake sending me their profits, £711 profit. Samuel, one of my other members on the Bitcoin trades, sent me his profits. You can see he sent it to me saying today's and yesterday's trades, £1,700. Honestly, guys, members in my VIP group are really killing it. I've had so many members send me their results. This woman made £319 off the Bitcoin trades. Okay, guys, so come and get involved. Get your spreadsheet updates from me every day. Understand the fundamentals really driving price, because it's key. Otherwise, you're gambling and you won't be consistent in the markets. Let me know, what was your strategy when you was trading gold? Did you understand about the bond market? Did you even know that the bond market was being directed by interest expectations? But if you didn't, now you know. Come into the channels, get this data so you can be on top of the gold trades that you're taking, and you're fundamentally understanding what's going on. Please, guys, like, comment, subscribe. Hopefully, guys, see you in the channels.
Okay, cool.